Welcome to Libertex. Whether you're new or experienced to trading, you may have some questions about the S&P 500. As one of the most heavily traded indexes in the world, the S&P 500 gives traders the opportunity to take positions on 500 of the largest companies by market capitalization in the United States. You'll often hear the S&P 500 and the SPY used interchangeably, but actually, the SPY is an ETF that owns the same companies listed on the S&P 500 and is simply another way to gain exposure to this index. With some of the biggest tech companies like Apple, Tesla, and Amazon, along with some of the biggest financial companies like JP Morgan, Berkshire Hathaway, and Bank of America, the S&P 500 is renowned for its exposure to big tech and big money. Still, the S&P 500's company makeup provides exposure to other sectors as well, such as defense, energy, and more. As a result, the S&P 500 is hailed as one of the best gauges of large-cap U.S. equities, and trading the S&P 500 allows traders to leverage the movements of each of the 500 stocks that make up the index instead of selecting the stocks individually. Stay until the end of this video for a complete breakdown of the S&P 500, along with a technical analysis chart reading and the ways you can start trading the S&P 500 through Libertex today. As always, if you want to support us to make more content from inside the markets, including the latest developments from the stock markets, cryptocurrencies, and more, make sure to like this video and subscribe to our channel to become part of our growing community of traders. So without further ado, let's get into the S&P 500. Introduced in 1957, the S&P 500 is regarded as one of the best proxies for the U.S. equities market, representing over 83% of the total U.S. equities market capitalization, and is the only stock index serving as a benchmark of economic health for the Conference Board Leading Economic Index. The S&P 500 index is structured on a market capitalization formula, which essentially means the larger the company, the larger the influence it will have over the index. To calculate the weight of an individual company, the S&P 500's total market capitalization is added. The individual company's market capitalization is then divided by this number, giving that company's weighted average in the index. Thankfully, all of this information is readily available and frequently updated by the S&P 500, as well as other financial institutions, so there is little need for traders to have to make these calculations. It's good to know how much weight the largest companies have over the index, however, as the index is more likely to move up or down depending on the movements of the bigger companies in the index. The top movers include Apple, Microsoft, Amazon, Alphabet, Facebook, and Tesla, which was added to the index just before the new year. As one of the biggest companies, Apple, for example, makes up roughly 7% of the weight on the S&P 500, and therefore can exert more influence than some of the other stocks that are listed on the index. The S&P 500 is an index that is preferred by many institutional investors, given its focus on large-cap companies, while the Dow Jones tends to attract more retail investors, but these lines are blurring as more and more retail investors enter the market. Another reason why the S&P 500 is so attractive over the other indexes is because of its diverse exposure. While the Dow Jones is largely focused on the industrial sector, the S&P 500 offers large-cap stocks across a variety of sectors, despite having more weight on tech and finance companies. Another key difference between the S&P 500 and the Dow Jones is the way the companies are weighted. As we mentioned already, the S&P 500 uses market capitalization to weigh the companies, while the Dow Jones Industrial Average uses the stock price itself. For the Dow Jones, the companies with higher stock prices exert more influence over the index, while for the S&P 500, it is the valuation and financial health of the company in the form of its market capitalization. Another interesting part of the S&P 500 is the methodology for how a company is added to the index. Rather than simply meet a formula, the S&P 500 uses a committee to evaluate and select companies to add to the index. The process is rather opaque, and no one knows the exact details for acceptance or rejection, but to be eligible for the S&P 500 index inclusion, a company should be a U.S. company, have a market capitalization of at least $9.8 billion, be highly liquid, have a public float of at least 10% of its shares outstanding, in addition to having positive earnings for the previous 4-quarter earnings. Many of the biggest companies that have higher weight in the index are very volatile, such as Tesla, for example. The makeup of these companies on the index is favored by many traders who enjoy speculating on the S&P 500. This is just another reason why the S&P 500 is one of the most popular indexes for traders, not only to assess the health of the overall markets, but to trade some of the biggest movements as well. Let's now jump into the S&P 500 technical chart to get a better overview of how the S&P 500 has performed over time until now, and what to better expect from here on out as we move forward in 2021. Alright, so we are now in the Libertex terminal looking at the S&P 500, and looking at this 5-year overview, we can see the S&P 500 has risen nicely each year. Of course, we can see the crash from March 2020, but from that point until where we are trading now at the end of March, the S&P 500 has gained nearly 75% year to date, which is phenomenal. So let's jump into the 3-month right now. And we can see that looking closer at the S&P 500, many traders are setting their sights on $4,000 and beyond as the target in the short to midterm for the index. But getting there may be a bit choppy, as we have seen in the recent weeks. Still, the overall trend is strong, and there is a good deal of support found at the $3,850 level here, and then at the $3,800 level here. And if the S&P 500 can close above $4,000, the next point of resistance might not come into play until the $4,100 level. So as a result, many traders are looking for pullbacks to average into positions that could see big results if the index does break this $4,000 point to press on towards new all-time highs. We've seen a bit of a correction in the markets lately, but with the stimulus and a resurgence of money into the markets, another bull run cannot be completely ruled out at this point in time. Have you ever traded the S&P 500? Let us know your experiences with the index and whether you think it will break and hold past $4,000. Feel free to comment with your price predictions to join the conversation with our analysts below. To open up trades on the S&P 500, you can start today by heading to Libertex.com and opening up an account completely free of charge. We also offer the top stocks, cryptocurrencies, forex pairs, metals, and more, and are the preferred trading brokerage for some of the top analysts in the world. Try it out via the links below today. As always, we hope you enjoyed this video breakdown of the S&P 500, and if you got any value, we'd highly appreciate your support to make more content by leaving a like and subscribing to our channel. Whether you're trading the S&P 500 or anything else, we wish you the best in the markets and look forward to seeing you next time. Thanks for watching.